you eligible for a VA loan and are about to buy or sell a property? We haven't talked about assuming VA mortgages in several years because the interest rates were so low. But it's time to talk about VA assumption now. Aloha, I'm Jill Ward with Century 21 Island Homes, and welcome to another episode of Aloha O'ahu, where today we're going to talk about assumable VA loans, whether you're going to be the seller or the buyer. I help people both relocate and move on the island. So if you have any additional questions or need assistance, please don't hesitate to ask. So let's dive into assumable VA loans. So, what does it mean to assume a loan? A buyer assumes a seller's mortgage when the buyer purchases a home and takes over the mortgage of the seller. It's a transfer of the loan from the seller to the buyer. So why would a seller care about a buyer assuming their VA loan? It is a great marketing tool for a VA seller to be able to tell a buyer that they can assume their loan if today's mortgage rates are much higher than when the seller originally purchased the property. Let's say a current VA seller locked in their interest rate in August of 2020 at 3%. That was around the time of the lowest interest rates in history. And let's say you are looking to buy when the rates are at 6%. 3% sounds pretty attractive. So the seller can advertise their property for sale and market it by saying that the buyer can assume their 3% loan. That's an attractive offer. To buy a home at $800,000 at 0% down, the payment at a 6% interest rate is approximately $4,800. To buy the same home at an $800,000 price point with zero down at the assumable 3% rate would cost you approximately $3,400. That's a big difference. So now you've had a glimpse how this VA assumption benefits a buyer. Buyers would, of course, prefer to buy a home with an assumable mortgage so they can take over that loan with a lot lower interest rate. If you are a VA buyer, you can assume that VA mortgage from the seller and agree to give the VA seller back their eligibility so they can then in turn go back and use their benefit on their next purchase. If you are not a VA buyer, that VA seller would have to tie up their eligibility with you and would not be able to use their entitlement benefit for as long as you, the buyer, was paying off that mortgage. Using that $800,000 price point as our example, buyers should note that if the seller only has $650,000 left on their mortgage to pay and the buyer assumes their mortgage, the buyer will then have to go out and get a second loan for $150,000 to make up that difference. Regardless, having the great majority of your mortgage at that 3% interest rate is a nice perk. Like most other topics, I can only cover the basics in this video. If you are a VA seller or a VA buyer, let's connect so I can provide you with more information. And of course, we will bring our lender into the conversation as they are the expert in loans. They can help us determine whether your loan is assumable as a seller or if you're qualified as a buyer. As with all things, preparation and knowledge are keys to a smooth transaction. So let's get you prepared to sell or buy your home. If you like this video and would like to receive notifications, make sure you subscribe to this channel to make sure that you get updates about everything Oahu living. My name is Jill Ward with Century 21 Island Homes. Thanks for watching. Aloha.